This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices fell on Friday, after U.S. consumer prices rose more than expected and China imposed new COVID-19 lockdown measures. Brent crude fell $1.06 to settle at $122.01 a barrel. U.S. WTI crude fell 84 cents to settle at $120.67 a barrel. Both benchmarks still posted weekly gains, 1.9% for Brent and 1.5% for WTI. For the day, oil prices sank along with Wall Street stocks after news that U.S. consumer prices accelerated in May. Gasoline prices have hit a record high and the cost of food has soared, leading to the largest annual increase in about 40 years. That raises expectations that the Federal Reserve will tighten policy more aggressively.
India's fuel consumption jumped 23.8% in May from a year earlier, continuing a recovery from a relatively low base in 2021 when the world's third biggest oil consumer was in the grip of a second wave of COVID-19. Consumption of fuel, a proxy for oil demand, totaled 18.27 million tons last month, according to data from the Indian Oil Ministry's Petroleum Planning and Analysis Cell. Last month's increase was the biggest year-on-year jump since April 2021. Consumption also rose modestly, by 0.4%, from April.
Moving on to the top news in the energy sector.
Saudi Aramco has notified at least 5 North Asian refiners, mostly Chinese, that it will be supplying less than contracted volumes of crude oil in July, several sources with knowledge of the matter said on Thursday. The cuts to Chinese refiners come as more cheap Russian oil heads to the world's top oil importer, which has refused to condemn Russia's invasion of Ukraine. Chinese oil demand has also been depressed by COVID-19 restrictions in the past 2 months. In addition, demand for Saudi crude has been climbing in Europe, where the European Union has moved to phase out Russian crude and European buyers are racing to find other suppliers.
The Intercontinental Exchange will amend terms of its low-sulfur gasoil contract to exclude product of Russian origin or exported from the country from gasoil deliveries with effect from January 2023, ICE Futures Europe said on Friday. Next, we have the top news in metal markets. An investigation into the fraudulent use of aluminium stocks to raise finance in China has expanded to 3 Shanghai-based companies suspected of having pledged aluminium stocks several times over, the state-backed Securities Times reported. The investigation comes after another trader, Ping & Trading County Limited, found this month it had been duped into providing financing for more than 30,000 tons of aluminium ingots, involving capital of 600 million yuan, when the actual stocks in a warehouse in Guangdong province were lower. Using commodities as collateral in financing in China is common and not illegal, but issuing receipts to repeatedly mortgage an asset is fraud and could leave more than one creditor holding claims to the same collateral.
Iron ore prices fell on Friday, with the Singapore benchmark headed to a weekly loss on renewed concerns over demand in China, where fresh COVID-19 alerts threaten to derail the economy's reopening and steel margins have come under pressure. The most traded September iron ore contract on China's Dalian Commodity Exchange ended daytime trading 1.7% lower at 914 yuan and 50 fen, $136.83, a ton. On the Singapore Exchange, the steelmaking ingredients most active July contract dropped 1.9% to $139 a ton by 0706 GMT, with a weekly decline of 2.6%.
We will now look at the top news in the agricultural sector.
Indonesia is further easing rules to allow more companies to export palm oil, an official said on Friday, aiming to ease bottlenecks and swelling inventories caused by an export ban and regulatory changes implemented to maintain domestic supply. The world's top palm oil exporter allowed palm shipments to resume from May 23 following a 3-week ban designed to boost cooking oil stocks and keeping runaway prices in check amid growing domestic discontent. But exports have been slow to restart, with confusion over procedural issues and new requirements for firms to join a government bulk cooking oil distribution program, where a portion of their product goes to the domestic market before export permits can be granted. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.